Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today is Tech Tuesday, so I will cover the NASDAQ, the stocks, Apple, and Google. And I will also cover commodities and the financials. My first blip shows the daily and weekly charts for the NASDAQ and Philadelphia Semiconductor Index, the stocks. The daily chart for the NASDAQ shows the tech-heavy index back below its 50-day simple moving average at 2,300, which indicates risk to weekly support at 2227. The weekly chart for the NASDAQ shows the 200-week simple moving average at 2266. Failure to hold that key level should accelerate the downside to 2227. The daily chart for the SOX shows the 50-day simple moving average as support at 352.97. The weekly chart for the SOX shows a potential bottoming pattern, which is a market ray of hope. My second blip shows the daily charts for Apple and Google. Apple is trading between its 50-day simple moving average at 132.62 and the 200-day simple moving average at 151.08. There's a price gap at 140.70, which is the January 24 high. Google reports quarterly results on Thursday without much hype this time around. Google is back below its 50-day simple moving average at 470.54 after a failed test of the February 25th price gap at 485.70, which occurred on April 7. My third blip describes Alan Greenspan's missed call on the risk of deflation. In my opinion, Alan Greenspan proved to be a one-hit wonder as Fed chairman. The maestro played the right strategy following the stock market crash of 1987, but since then his tunes missed the charts. Back on November 6, 2002, Greenspan worried about the U.S. economy and that it faced deflationary pressures. I guess he did not look at the price charts for COMEX gold or NYMEX crude oil, which showed bottoming patterns well before November 2002. Instead of deflation, the U.S. economy faces commodity bubbles. For COMEX gold, I show quarterly support at 879.50, with the daily and weekly and monthly resistances at 941.6, 938, 983.2, and 1020.9. For NYMEX crude oil, I show monthly and semi-annual supports at 106.80 and 99.83, with daily and weekly resistances at 113.89 and 115.26. A new all-time high has been set again this morning. My fourth blip shows yet another potential new low for the regional banking index, BKX. The BKX is well below its 50-day simple moving average at 83.70, which indicates risk to the March 17th low at 73.22. The BKX represents 24 regional banks, including Bank of America, Citigroup, JP Morgan, and Wachovia. We know the woes of Wachovia. JP Morgan reports on Wednesday, and Citigroup reports on Friday. At the lows, the BKX traded at levels not seen since April 2003, before most of the problem mortgages were originated. The new lows, if we get new lows now, we will warn of even more bad loans right through 2009. Send your comments and questions to support at rightside.advisors.com. That's today's 4 in 4. Enjoy your day.